One of the reasons that the real estate market is slowing down is because the interest rates are much higher and the buyers are in shock. So they want to hold on their buying power. So let me share some of the different options that you maybe can get a better rate that help you to move forward to purchase houses. Okay? This is Floranita from Austin 101 Realty. We have been talking to you a lot about reinvesting or buying or selling real estate. If you are interested in knowing more information about us, click the link below or comments below. So number one, improving your credit score. If your credit score is lower or very low, there is a great chance that when you talk to some mortgage lenders, your interest rate actually will be higher compared with some people whose credit score, let's say 780, 800, all these kind of numbers. How can you do that? How can you improve or get a higher interest rate when your current interest rate is not high enough or is not good enough? Talk to some credit repair specialists. So they're going to give you some good advices. What are the actions that you can do? Maybe pay off some debts, maybe start to pay your credit card, or they're going to have a visit with you, go through your credit situation, and they're going to advise you a few items that you are going to do that can really start to see your credit score being improved and then jump up. Number two is shopping around. So each lender actually have different programs, or they work with different kind of bank or mortgage system or mortgage brokers. When you are ready to buy a house, don't just go ask for one. Let's say, I have a Chase Bank. Do I just go to ask my Chase Bank banker? Don't do that. Try to shop around, get at least 2 or 3 different kind of comparisons on interest rate. What can they give to you? And then in the end, compare with different mortgage rates, fee charges, and then points here and there. Then settle down with one. Okay? Number 3 is you are going to compare your loan is going to be long term, 30 years, or shorter terms, maybe 20 years, 15 years, 10 years. So you're going to compare different programs, monthly mortgage payments. So not just the interest rate is going to affect your decision, but monthly payment and the length of the mortgage that you are going to commit. So do a little bit of comparison, okay, with all the different terms that is going to affect your mortgage payment monthly. So number 4, how about putting down some more down payments? So let's say 10% down payment versus 30% or 40% down payment. If you have ability to put more down payment, then your loan amount will be smaller, then your monthly mortgage payment will be less. Or if you have some equity from your other properties, maybe consider to cash it out or refinance and then bring it to help you to put more down on the project that you are going to get into. So your cash, your saving, or sell some of your stock options. I'm not sure it's a good idea, but can also check it as an option, or take out some equities from other houses. A little bit lower interest rate and less monthly payment. Okay. Number 5, buy down mortgage points. Okay. If you are only going to hold the house, hold the property only 1 or 2 years, very short term, then don't do it. Okay. But if you are going to hold the property for more than 3 years, you probably want to consider, let's say current interest rate is 7%, then ask your lender, each lender, the buy down points programs are going to be different. Ask around about how much for buy down 1%, it is equal to how much cash you need to put into. If it's worth it, consider about it. Then you are going to purchase your house maybe at 6% or 5% after you buy down the points. Okay? Number 6, lock the rate. Okay, so with the real estate market, it is the buyer's market. We understand that buyers definitely has more options to shop around the houses to look at different properties. But once you decided you really want this house or purchase this property, and if that time the interest rate is good, go ahead to lock the rate. Because if you did not really pay attention, quickly lock the rate might be go up again. So when you found the right house, got into contract, quickly lock the rate or consider lock the rate ASAP. Okay. Number 7, refinance later. Let's say I go into the contract with the interest rate of 7%. A few years down the road, if the interest rate come down to 4% or 5%, then you can refinance later. But if the interest is continue to shoot up, then at least you're locked at 7%, which is a good deal compared with 8 or 9. So just go ahead to lock it as the current situation, as the current rate, and then do consider, refinancing later, a few years down the road. Okay, number 8, so lender promotion. Okay, with the market slowing down, the lenders, they still want to really, get some deals done. Some lenders are giving some promotions to really encourage the buyers to close the deal with them. Just when you are asking your lender, say, hey, do you guys have any promotions? Then you are going to be surprised. Maybe they are going to get some good promotion deals from the lenders. Number 9 is the builder's promotion. Okay, so a lot of new home builders, they are promoting, say, that because they know the interest rate will continue to show up. So a few months ago, actually the builder side has already did something aggressively. So they have already worked with some specific lenders. So we have been really receiving quite a lot of emails from different kind of builders say, hey, come check out the house with us. If you use this specific lender or builders, you can still purchase the house. 3, 4, 5, 6. Okay, so we see these kind of emails quite a lot. Check out some new home builders, see if they have some good incentive for your interest rate. They can do much better than the market rate. Okay. Number 10, seller incentive. Okay, with the market's been slowing down, the seller a lot of times they're impatient, they're disappointed, and they really want to make a deal with the buyer to sell their house. A lot of seller or seller's agent really letting the buyers know that the seller will give incentive to help the buyer buy down points. Let's say with the current rate 7%, with 5K, 10K, or even more, maybe you can buy down 2%. Will you consider? I think sometimes that's a good deal. If it's 7%, I maybe not, feel so. But if the seller is paying it, why not? If the contract price is low, I can get 5%, and the seller is willing really work with me a lot, to put more terms, more favor me as a buyer. Why not take advantage of it? I've been presenting, different kind of options, total of 10. Which way you think you might be possible to try it out or check it out or talk to some different lenders to see which option might be good for you. So share with us below which way you think you will be trying. Okay, thank you for watching.